Hi, my name's John Fazio. If you're watching this video, then you're trying to find out if you can refinance out of a foreclosure situation where you're behind on your mortgage. Okay, so what we're going to talk about right now is the good, the bad, and the ugly of refinances or workouts of a foreclosure situation. Okay, the good. So the good is where you are proactive and you address the problem before it really comes to a head. And the way you would do that is if you are getting behind and you're a couple months behind, you see if you reach out to your lender, you call them and ask for a deferral or forbearance of your payment obligation for a period of time so that you're being reported as still being current on your mortgage. If you can get the lender to give this to you by telling them that you're going to go out and try to get another more affordable loan, there's a chance that, number one, they will avoid putting any negative credit remarks on your account and put you into that forbearance situation where you're considered in good standing. And number two, that the new lender will not look at the credit situation as being delinquent and as a red flag that you shouldn't be given another loan. Okay, so that's if you're going to Chase, Bank of America, Rocket Mortgage, one of the big, lenders. Now, the bad is you've now gotten behind, you're in foreclosure, there's a foreclosure complaint served against you, and you can't really get a loan from a traditional bank. For one thing, Fannie Mae and Freddie Mac have policies in place that you have to have a seasoning period of 2 to 7 years once your loan is defaulted and it goes into foreclosure. So that's really the key moment, is that default. But even before that, almost all lenders will require that you have 12 months of consistent on-time payments in order to give you a mortgage. So the bad, but it can be really good, option is hard money, or a two-step process where you get a hard money loan and then you refinance. So how does this work? Well, it works for those people who properties are appreciating in value and you're in a market where the price for real estate is hot. So what happened is your original mortgage amount is fairly low compared with the equity that you've accumulated. So for a lot of people in the United States, this is actually the case of what's gone on during the financial crisis. So if the amount you owe is only, let's say, 65% of the amount that your home is worth, then you'd have a good chance of doing this, provided that the payment would be an easing up or a reduction because of the fact that you can get an interest rate that's lower than what you originally got. For most people that took out loans in 2020, you're not going to get a lower interest rate, and it's going to be hard to match the payments with a new loan unless you really extend the term out a lot. But for other people with older loans, they still could cut down on their payment with a combination of a lower interest rate and a longer time horizon by getting a refinance. Now, some of those people might be able to go to a lender that has looser credit standards, but many people are going to have to go to a hard money lender. The hard money lender will require that you treat your home as an investment transferred into an LLC, that you have sufficient equity cushion, and there will be heavy interest and points, something like 13-14% interest, 3 or 4 points, and this would be considered to be a bridge loan. Once again, this works really well in appreciating markets, because if you can do this, and sometimes those loans won't have payments, everything will be prepaid, or sometimes they will have payments, but they'll be at a interest only type of category. And if you're in an appreciating market, you can then transition to refinancing out of that loan after, say, a year or two. Some people call these foreclosure bailout loans. Okay, and then the ugly. The ugly is a situation where you just simply don't qualify for any kind of traditional financing or mezzanine bridge loan financing through a hard money lender, and you have to go and find someone that is actually willing to take a risk on you. But sometimes there's ways that you still own your home. So you may be able to find somebody that has some liquidity, who has cash on the sidelines, that if you give them a sufficient amount of interest on the loan, or you give them a percentage ownership in the house, they'd be willing to give you sufficient financing And this can come in a lot of different forms. It may not need to be that you pay off the entire mortgage. It could be that they just give you enough to reinstate the mortgage and keep it in good standing for the period of time necessary to get to the point where you can now refinance. Okay, but one strategy that is very attractive for a lot of people, especially people that have had prior businesses, is where they utilize a combination of the hard money loan and then the traditional refi in a situation where the property is actually underwater, but it's in an appreciating market. So what would happen is they would take out this hard money loan because it's all the money they can get based on a 65% equity figure, and then they would be expecting the market to go up and to kind of pull them out of so they might owe a lot more than what the property is actually worth, but they can get a loan for 65%, which is what we call a short pay. So they do a short pay that is then funded by hard money lending and use that to get a big reduction in what's owed. Then they refinance into a more traditional loan as the market pulls them out into a profitable equity rich situation, and they may have accumulated $100,000 or $200,000 in this bailout of equity, so that they can, when they finally do either downsize or move, they have some value in their real estate that they can tap into later. Again, that doesn't work for everyone. It's a very specific situation. But if you would like to know more about financing options when you're facing a foreclosure, give us a call at 201-529-8024. Access one of our web forms. Email me at jfazio@fazio.com, or watch some of the other content on our YouTube channel. Thank you so much.